Okay, today is August 10, 2014. In this video, we're going to take a look at some trade, possible trade setup scenario on three different stocks. One is Walter Energy, and the other one is BlackRock and Coach. Okay, so you recall, I think I posted that chart earlier. Also, just recall that the streets chart was posted back on July 18, and we're talking about the Walter Energy. Forming a possibility of forming a cup and handle. And I also traded this guy on this side of the cup when it's forming, but I did not take the trade while it's forming this handle. So right now, if you could take a look at since then, it kind of, took a little bit longer than I anticipated to form this little handle, but it is forming this handle, and so it's trying to break out. And last Friday, it got a nice little move here. So essentially, we're basically looking for this thing to break out, and then with a Fibonacci extension, on a major move, based on this cup and handle and that sort of thing, we essentially are projected back up to, somewhere around this, 878, 880 level, probably into this gap here. And then the 80% point is somewhere around this 830. So essentially, this pivot high here. Okay, so you kind of see some of the possibility here. Now the thing is, this is a nice little setup, because if I take this out, you really could see this is a nice forming base here. Right, let me go and redraw this line here. Okay, so essentially put this here. So it's a nice little baseline here. So it's kind of poised for breakout, and it's really obvious, right? So it's got a lot of eyeing this. And a lot of followers know that I don't like to play, trade breakout. So, but if you want to, there's nothing wrong with that. It's depending on individual, preference. Right. Now, the thing is, there's a couple possible scenarios tomorrow. Right? One is that it's going to gap up, okay, on the open. When it gap up, you don't want to chase, because the thing is, if it gap up, wait for it to come back down. Let's say, for example, you're going to gap up, right? Wait for, let it gap, right? Let it run a little bit, because eventually, if you're going to hold, it's going to come back down and tag this line here and then bounce. Then we look for another setup for the long. Then now you could have nice, a small, a stop level, right? So it makes it, real clean, because right now, if you chase the gap, okay, then the chances are you might get faded back down later on, and the all might not be worthwhile. Okay, then the other thing is, the other possibility is could be a little fake out, right? It could come up, and then let's go to the intraday. Let's go to the 30-minute chart here, and we take a look at that, or the 78-minute. Okay, so essentially, let me go and extend that out. Okay, and we go to the 14. Oops. Let's go to today, and then go to 11. Okay, so extend this out. Here's that baseline, that breakout. All right. So the other possibility is that it could, come up, right, and then fade back down. Right. Okay. All right. So when it does that, we don't want to chase that also, because the first breakout, we don't want to, want to chase this thing. All right. Because of what we really want to do is, on an intraday basis, we want to watch this. For example, let's say it go up. Let's put this line here. Let's say it go up, and can't draw a vertical line. Okay, so and then when it come back down, right? Okay, we want to we want to try to look for setup here. The things that you want to look for is like maybe a hammer or a narrow range bar, right? And it kind of hug this this line for a little bit. Then you see the first candle that maybe close above that. Then the next candle that move above that close. Then you could go, right? Okay. Then the other one is that it could, the possibility is that, it just come down, right? Okay. Then when it come down, we want to wait to see, can it hold this support level, right? Then let it come back up, right? Okay. If it can't hold the support level, then the chances are we're probably seeing, there's a good chance that it might come down and test this particular level here, 560. Okay, so then this is a different ball game now. If it come down to 560, it's a totally different trade. We're no longer playing a breakout. There might be another possibility, another trade, right? So that's basically what you want to keep an eye on these possible scenarios, right? Gap up, fake out, just pull back, right? Without even, because there's too many people eyeing this thing, and maybe the market is negative, open down, and it kind of drag this thing down. Okay, so basically that's what you want to keep an eye on. Just like anything else, we just plan some scenario and sort of, have a game plan of what we plan to do if we have a certain scenario, appear, right? So instead of, kind of scrambling when it happened and then, you don't know exactly what to do, right? So essentially that's basically what you want to, try to get at and look for that trade. Then essentially, also the other thing is we're looking at stop level depending on what scenario, right? The stop level, you could be aggressive because you see, on this, 78-minute chart here, you can see, there's a little pivot here, where you kind of broke this pivot. If you're playing that real aggressively, this is not day trading, okay? So I'm not telling you how to day trade this thing. If you're looking for some clue to day trade this thing, then let me say this right now. Save yourself some time. Stop watching this video because I'm just going to talk about swing trading. Okay, so essentially, if you want to be aggressive, you could put a stop here, but then, then you might, depending on what your trading plan is, expectancy is there's two sides of the equation that you could manipulate, right? One is the, win-loss ratio, or the other one is the average win versus the average loss, right? So you could play around with those. Okay, so that's why, on the stop loss, depending on how tight of a stop you want to use, then it alters the the amount of win versus the amount of loss. You could get big win, right? But then the time, the percentage of win versus loss is maybe much smaller, right? Okay, because you probably get stopped out much more often than you get this big winner, right? So it starts depend what your trading plan is, right? So if you want to be aggressive, then basically this level here, and if you want to be a little bit less aggressive, then probably come down somewhere around here because it took out this this pivot here and it kind of held this, right? Came down, tested a couple of times, and it held. Okay. So that's basically a little bit of insight on Walter Energy. I'll be looking at this, but I probably won't be trading it until maybe see a little bit of a pullback. If it get away from me, that's fine. There's a lot of good setup right now. Since last Friday, we got them. S&P held the 190 level. Now a lot of people did not see the penetration below that 190 because it was overnight. Okay, so and the market seems to be holding its ground above that 190. So we might get a little bit, a little bit of a bounce for at least a week or so. So you might want to see that S&P, up at that 145, 150. I mean, 1945, 1950. So it's basically somewhere around the 194, 195 on the spider. Okay, and so there's a lot of good, setup that might give a good bounce. So if you miss this trade, you miss this trade. There's a lot more opportunity there. Let the trade come to you, okay? So the other one we'll take a look at is, let's look at BlackRock first. I never traded BlackRock, but one of my followers kind of looking at this, so I thought maybe I'll take a look at it and see, what's happening there, okay? So you can see that there's got this trend line here. It's kind of been, bouncing off this support here. It's kind of nice support, and also, this Fibonacci retracement. Let me take this out because that's basically, if I were to trade it, that would be, my on-off type of, tool that I use to see what kind of, possibility of, reward versus risk ratio. Okay, so essentially we were looking at this breakout here, on bouncing off this particular support here, essentially, this support line and looking for a break above this. Okay, and if I go and take a look at the 78-minute chart here, you can see a little bit more clear on this bottom. It's basically like a double bottom here, right? Okay, so maybe it's a little bit more than a double bottom because you got also this, right? So it's like a little bit of a head and shoulder, a little bit head and shoulder break over there, right? But in regardless, we're basically looking forward to, break about this particular pivot, right? And then, work itself up. So if I were to, set up the stop level, maybe one possible, basically the stop level might be, anywhere down here. Okay, so, basically that's what we're looking at. And if I were to, set up, let's see what kind of risk and reward ratio I'm getting. Okay, and let me use my I set up my Fibonacci retracement to do these all in all. So basically that's a multiple of 100%, right? So if I get this little stop, so essentially it's a little bit over $6, a little bit over $6, so close to $7 stop, right? $7 out of $300 stock, that's only a little bit over 2%, right? So essentially you got this 1, 2, 3. If you get back up to this, this peak here, so essentially you got a 3R, return, right? Okay. So that's basically what we're looking at. If you want to be a little bit more conservative, you could take it down here. But, then, let's be a little bit, right. So I still get, maybe 1, 2, 2.5 or so if we get up to this peak here. Okay. So essentially that's BlackRock. And the other one is Coach. I believe Coach came out with earnings last week. Right. Once again, I kind of got this little setup, basically looking at, so we got this, this baseline here, kind of broke that last week, right? Okay, so right now we want to see is there some carry through or the follow through, and if we take a look at the intraday chart here, you see this baseline here. So yeah, on Friday, it got this big candle, right? It ran up, and usually when it does that, if you will happen to holding that right down here, and you got this kind of run up, you definitely want to take some profit, right? Because you see, it's always going to have a pullback. Now we might also expect a pullback a little bit more deeper than that, but fortunately it wasn't that deep, so it's kind of kept a little bit shadow. And you see that it pulled back and formed these little, what we call a narrow bar, this very small range, right? Small range candle. It's kind of like a little pause, right? So you want to look for these kind of candles, kind of set up, for another move, right? Either on the downside or upside. But on this one, it's basically, setting up on another move, another surge on the upside, right? So you can see that it kind of make another move. But we basically want to see if it's indeed this big move is going to continue, then it should break above that, the high of Friday. But again, look for the possibility of pulling back and retest this level, right? Because although it kind of, pulled back a little bit and it tested a little bit, but, so again, it's all depends on how aggressive you want to be, right? You could set the stop right here if you want to be real aggressive, okay? But if you want to be a little bit conservative, then you say, well, we have to break through this pivot. So if it come down and move below this pivot, then maybe this move is not as strong as one believe. Then you want to sort of get on, wait for it to reestablish, because see, you got this basically like a baseline here, sort of a trading band, right? So you're kind of breaking through that trading band here. But this big move here, the only catalyst is, I think it was the earning. Now there's some rumor about, somebody might buy this and all this good stuff, but don't trade on rumor, trade based on price action. If the rumor move that price action, fine, whatever it may be, but trade the price action, don't play, try to trade off the rumor. Okay, so essentially, that's basically I'm looking at, and again, if we set up that trade accordingly, then if you just try to get it back up here, on this level here, right? So you basically are talking about a possibility of 3-to-1 return on your, risk, right? And if it get up to this gap here, right, then you could basically look at somewhere around, possibility of a 7-to-1. So that's basically some, quick look at possible trading scenario. I mean, don't just take it as is. Do formulate your own trade, setup or trigger, that suit your style. Okay, because these, this is only, a few possibility, but they are not the only possibility. And there's no such thing as right right way to trade or wrong way to trade. It's a matter of how you manage your risk. Okay, so good luck.